One of the most important functions to the accounting department is paying taxes. No one likes to pay taxes, and they are very, very complicated, and it is why you typically need a CPA, a certified public accountant, to make sure that you're paying all of the governments the right amount of taxes that you owe. It is very important that you look to decrease your tax liability as much as possible. Realize the main type of tax that you're going to be paying is income tax, and is again going to be based on your tax liability that you owe. Your tax liability is all based on how high your income is. How you actually lower your tax liability is making sure you write off all of the expenses that are related to the business. If you don't write off every expense, you're increasing what your liability is and thus having to pay higher taxes. When it comes to the overview of taxes, everybody knows about the IRS, the Internal Revenue Service. The IRS is not a fun government organization to have mad at you. So it's a good idea to properly pay your taxes on time in the right amount and avoid them coming after you. The last thing you want is the IRS conducting what is called an audit. An audit is when they're going to actually look at your books and make sure that all of the expenses that you're recording are capable of being written off and that you're not avoiding any income that should be written off. Realize that businesses get in big trouble when they do one of two things when they're trying to decrease their tax liability. Typically, a business can get in big trouble for one, writing off expenses that do not relate to the business and are more of personal benefits for the business owner. These cannot decrease your tax liability, and if you try to write them off, the IRS is going to get very upset. Secondly, is not actually reporting all income that you're actually making. So just not even reporting all your sales, and again, thus saying, hey, we made less money, so we owe less taxes. Anytime you cheat the IRS, they're gonna fine you for a lot more money than what you actually had owed. Another type of common tax that has to be paid is sales tax. Now, depending on where you're located, every county in your state might have a different sales tax rate. Even sometimes the actual city within the actual county even has a higher tax rate than the suburbs in that same city. So it's gonna really depend on your local area. And realize that when you're making internet sales, you're primarily, as of early 2018, only responsible for taxing sales for when you're shipping that product within your state. If it leaves your state, there is no sales tax on internet sales. Again, this could probably change any time as the government has constantly been debating how can we make sure e-commerce businesses are getting properly taxed and they're paying their taxes. Because as of right now, what they expect is that the individual making the purchase actually pays something called use tax. So instead of the business charging sales tax directly to the consumer, what they expect is that consumer to actually pay use tax to their local government and make up the sales tax that was lost on the sale. The problem is it's just not regulated very well and it's just too hard. So there are many different types of taxes. It's all going to be dependent on the business that you own, but it can get very overwhelming, especially payroll taxes. When you have employees, realize you're going to have a lot of taxes paid to your local government, and it can get overwhelming, and is why you should have a good CPA to help you guide you through paying all of the taxes that you owe. If you have any questions related to business taxes, please do not hesitate contacting us. Thank you.